Welcome everyone back to another edition of Forex Tech Magazine. You with your guy, Lewis, and we are here today to talk about trading the Forex market. So before we get into this, let's get right into the disclaimer. And the disclaimer goes a little something like this. Any and all information that you receive from us should be considered to be for educational and entertainment purposes only. Nothing that we give to you should be considered to be investment advice. If you're in need or you're seeking investment advice, then our response to you would be to seek the advice of a licensed, registered investment advisor. Seek their counsel. Anyway, that's the disclaimer. So since we got that out of the way, let's get right into this and let's get into why you came here today. That is for some trading information. All right, good deal. So as I correctly predicted last night, and as I went over a little bit today when we were speaking at the 5 o'clock afternoon, just general trading session, I was right. I was right about the moves that was happening with the Great Britain pound. Right, told you that it looks like it was, close up to resistance. Right, and wasn't looking to buy. If anything, probably be looking to sell. The one thing that kind of confused me, they were looking at a lot of different pairs, was the fact that there was a lot of just jumbling around up here. So it looked like it could go up, but then also too, it could just be a symbol or sign that, hey, price been trying to push up. It's not getting anywhere because sellers are pushing it down. So that means that a big sell is going to come, into play here shortly. At any rate, because we were near resistance, was not looking to buy, would be looking more so for opportunities to go in and sell the market. And I believe last time we were looking at the Great Britain pound, Australian dollar. Yeah, and this is the one I was saying get in, but unfortunately, when I said to get in, because I was saying to get in right about here, I was going to wait for price to push back a little bit. This is before all that news information came out about what was happening over with Brexit and everything. And what I was saying was wait for the pullback and then get in, off of the pullback. Well, while we was waiting for the pullback, price just collapsed and began to go straight down. Now, of course, you can see here, these are some pullbacks here at this area, which would have been nice to get in because then price still continue to make a move down. Up until what you have right now where price is trying to looks like kind of trade back a little bit because price did go pretty far pretty fast. Now with that being said, let's see what kind of pick time like over 100 some picks right there. So with that being said, if you guys would have listened to us, if you guys would have taken a short position into the Great Britain pound yesterday, yes, you would be potentially in the money today, right? Now, the only question we got right now, at the moment, is do we get into this particular trade or do we sit back and wait for it to get make a better position? How do we figure that out? How do we find out do we want to jump in on this trade now, or do we want to sit back and kind of wait and see what's going to happen going forward? Well, one of the ways that we do this is we come in and we draw our handy dandy lines on the screen, which they've already been drawn for us. Now, if you notice here lately, I haven't been drawing any support resistance lines. I've been pretty much using what's already been in place here on the charts for us, which has cut off a considerable amount of time on our broadcasting, but that's okay because I like the fact that we put those in place and that they work and that they continue to work, even though these are lines that's been driven over a long period of time, and these were lines that were established, months and weeks ago, right? And this goes to the power, which shows the power of support and resistance lines and how they can help you be a little bit more accurate in your thinking when it comes down to trading. So now what we're going to notice is that we've succeeded way past this support line here, right? Matter of fact, we've come down to another level of support here. So the question is, and if you notice, this level of support that we have here, right, for price there, was also resistance at one time for price as well, right? Blah, blah, blah. So we got price coming down. Let's try a fib extension. This right here is your smart trader tool. Folks, if you haven't already went to the site and registered, what the hell are you waiting for? Right? I mean, really, what are you waiting for, man? You're waiting for somebody to come into your living room, sit down beside you, and actually get you registered for the software? Because if you are, it's not going to happen, right? What you could do is get in there, get off your ass, and get in here and register, because this is the software that you need if you're going to be a better trader. It helps, it works, period, right? You just need to get in there, you need to use it, okay? A couple things that we see here that are very, very interesting to us. We look at this particular downtrend here in the market. We look at our Fibonacci sequence. We see that, Fibonacci was supposed to go out to the, what's that, 186,431. That is exactly where our line of support is. And you saw me put the line of support before I put the Fibonacci on the page, so I'm not trying to force it. You also see this is exactly where our price came down to, and now that our price is making a move up from there. This is very significant. This is definitely one of those things that makes you pay attention, and this could definitely be a possible turnaround, or at least a retractment, right? So, once again, if you're gonna buy into this market, put your stop loss here, or here below this, or below the low, right? Look to get in and probably ride this thing back up, at least until this resistance here, right? That's where I would look to ride it up to. Now, let's think about this for a second. Does this mean just because I place this Fibonacci on here and I do the chin lines and I'm coming in here and I'm putting in the stop losses and blah, 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 does this mean that I'm absolutely 100% right that this is actually going to happen? Absolutely no. Anything can happen. This thing could crap. It could shit the bed tomorrow and continue to drop down low. All this means, though, when I come in and I do the Fibonacci and I do the support resistance line, is that I'm giving myself a higher probability to be accurate in my trade, because I'm looking to what's happened in the past, where these things have, where the market has made U-turns in the past with this particular currency pair, in anticipation that other traders are going to recognize these same U-turn points in the market, right? And they're probably going to be placing their stops and their take profits and everything at these same spots, and they buy entries at these same spots. So therefore, the past has a higher probability of repeating itself around these same areas, right? That's all we're trying to do. We're trying to capture probability, right? We're trying to put lightning in the bottle. Now, there was a big pullback yesterday, so there could be a continuation today as far as traders getting in and being fearful of the market and continuing to pull back. Normally, when we buy into a position, we want to make sure the market's in what we call a buying mode, right? Right? We want to make sure that prices moved up significantly, it's retested, maybe a low or something, and now it's poised to continue higher, right? It hasn't done any of that right now. All it's done right now is just bounced up off of a trend line. Bounced off of a support zone, right? This could very well be a dead cat bounce, right? And a dead cat bounce is essentially, if you took a dead cat and you threw it down on the ground real hard, it's gonna probably bounce up a little bit, but then it's just gonna fall flat. So it's gonna lay there, right? Same thing with stocks, right? Or with investment instruments, right? It can hit a low pretty hard, right? Bounce up a little bit, and then go back flat, right? Hit back on the ground again, right? If it was a live cat, you throw it on the ground real hard, right? It's probably gonna bounce up off the ground and scratch the shit out of you, right? This right here is not necessarily gonna do the same thing. So that's why you have to have a word of caution here. That's why you have to be very careful, and that's why you use your stop loss and you don't overtrade on this particular trade, right? You have a strategy coming into place. Use a standard lot. You're not going to be doubling and tripling up on the lots. You use a regular standard lot. And see, so that way, if we do lose, and if we're not right, then we're probably only going to risk losing probably about maybe $200 or $300, versus if we go in there and we double this thing up. Okay, this is about 1,000, a little bit better. But if we go in there and we double this thing up, triple this thing up, we're risking losing a lot more. Maybe even 6,000 or 7,000, which we don't want to do that on any one trade. Okay, even 1,000 is too much to lose for me personally. But given the fact that we're seeing a low, higher low, and this could be considered high, but higher low is minimal. It's not that much. But if it catches enough, it could push up, and there's enough technical stuff in play that makes me think that, hey, you know what, we may have something with this particular trade. The key is, though, let's look at how we trade now all the other currency pairs for the Great Britain pound, and see if we can get some type of consensus that everybody's ready, everybody's hit the bottom, and everybody's ready to come back up because once again it could be added momentum for this particular pair. Okay, so here we go. We have the bam, same thing. Man, this thing really crashed through. How many pips was that, man? That was a tremendous amount of money that was wiped out of the market yesterday. And this one, wow, 443 pips. That is a tremendous amount of money that was wiped out yesterday. Really ridiculous amount. Huh. Let me see something. What was that? I did that one on a dollar a day. Let's see here. If we do this on a day, it's definitely not going to come back. But if we do it this way, this one right here might be a little bit tougher to trade. Still think it has the same setup potential. But this one right here, I think I probably will stay out of this one today. Maybe watch how it plays out. But as you can see, I mean, his support's coming up. You could come in here. Once again, place your stop loss a little bit below the swing low. And look to try to ride it up back to normalcy. Which would be at the 171.853 mark. Let's see what that looks like on this day. 171. What? Oops. 171.853. 171.853. Oh, okay. They're basically taking all the way back up. What was that before? I don't know if it's gonna do all that today, but that's a lot. That's a lot. That's a lot. That's a lot. What's the next one? Great Pound, Japanese yen, blah blah. Yeah, this is another one. It hits that support. Bam. Yeah, like I said before, typically I wouldn't necessarily want to advocate placing these trades, but just kind of giving the raw extortion of sell-off that happened yesterday. I am going to say that I think that we could get back in at these levels, and there could potentially be some success here in this market. The question would be, where exactly do we get in and where exactly do we get out at? Searching. Yeah, I mean, these look, I mean, like I said, right now it's kind of consolidating. Just moving sideways a little, up and to the side. Hasn't pushed high up to the side, but moving up to the side. Let's see, are there any economic data? Is there any economic data that's coming out for the Great Britain Pound over the next 24 hours before we get into the weekend? That's going to be key. That's something we want to pay attention to. News and then because it's going to get sway. Nothing economic wise coming out about the pound over the weekend. Let's see. Okay, so the rest of the world's pretty much sold it off and said, that, hey, this thing is not moving up anymore, and that it is done. So here's your opportunity. Either you can flow with everyone else and continue to sell this thing off, or you can take the risk to try to, you know, buy it and see if it goes back up. Um, let's look at what Momentum's doing. Sell, sell, sell off. So it's going sideways. It makes a new low. Alright, low. I'm gonna tell you, man. I really think that there could be some potential in just going ahead and buying in on this. I really do. I really do. And I know a lot of people probably won't agree with me, but I think that we take the risk. And oh yeah, I think we take the risk. There could be some potential reward there. And the reason being is because I'm looking at the dollar, U.S. dollar. It's kind of in a sell mode itself. It's pulling back some. Oh, so if the dollar's pulling back, that means we're on a risk on type mode. I think oil came up some. Yep, oil came up, pulled up some. We got 3 positive. Well, one, I don't know how positive these are, but it pulled up some. um, could be for something. Could be for nothing. What do we have about U.S. information that's coming out? Industrial production, manufacturing. U.S. oil rig counts. All right, so there's some information that's coming out here later today. Don't know how impactful it's going to be overall on the currency pair, but definitely it's going to have an impact. So a couple things that we could do. First and foremost is we could stay put, not do anything. Second of all, we could go in and we could definitely open up a buy position on this right here, which I don't think that necessarily that's a bad thing to do, to put a buy position in. All right, I think that buying in on this right here might actually be pretty good. So I think that's what I'm gonna do. I think I want to put a buy position on this right here. Let's see how it play out. I mean, it could be still be too early to, you know. And I always want to do this because we're going to be real close to our stop losses here. How many currency pairs is that going to be? We're going to stay out of the cab. We're going to stay out of the cab. I might get to that. 1, 2. Oops. 2, 3, 4, 5. 5 positions, 5 stop losses, potentially $5,000 that I could have used. I hate that. But, you know, spreading the risk out. We're going to put a tight stop loss in place. Excuse me. And we know where our target is for our take profit is going to be somewhere up in here. So we're not looking to make everything that was lost back on yesterday, but we are looking to try to at least retrace those steps a little bit. And I don't see why we shouldn't be able to do this. I don't see why it should be a bad trade. I don't know. We'll see. All right. So anyway, wow, this is gonna be a quick one today, man. It's like 19, 20 minutes or so. Yeah, I wish I had more for you guys. What I'm gonna do is I'm gonna put these trades on here shortly. Look for some entry points and my extra points or whatever, and in that way I can get back with you Monday, because today is Friday. Get back with you Monday and post the results, and hopefully we make some money on this. If not, you know, we'll talk about what went right, what went wrong, But yeah, I think I'm out, man. I think I'm out for the day. Trying to think, would it make sense to stay in this trade? Anyway, yeah, I think I'm out for the day. Listen, guys, have fun. I hope you guys stay safe trading. Before I leave, I want to give you something positive on a positive note. And a positive note goes something like this right here. Hey, do something with your life. Do something great, man. Greatness is within you, right? What am I going to say? Les Brown, and this I love this quote right here about always shoot for the moon. At least that way you don't make it, you be amongst the stars. I'll tell you another one. Dr. King says something about whatever you're going to do in life, do it better than anyone else. All right, if you're going to sweep streets, be the best street sweeper to ever live. Okay, sweep streets so well that the street sweeps like Michelangelo, or did paintings or whatever, or just sweep streets so well that the host of heaven have to look down and say, wow, that was a really great person that could sweep streets like nobody else could. I know I'm probably messing it all up and butchering it, but the point is this right here. Whatever you're going to do in life, whatever you choose to do in life, choose to put 100% effort into it. Right? So if you're going to trade, choose to put 100% effort into this. A lot of times this stuff looks easy, and when you actually get into it, it's pretty crazy and you get messed up pretty quick. All right. If you guys were with us earlier today, you see that I was right about the U.S. Canadian dollar, or about the Canadian dollar movement. But unfortunately, my broker chose to close that account out because it fell below the margin account value over the last 2 days when it was trending sideways, right? I could have easily went in and put in another additional $30 or $40, and that would have kept it open, but I didn't. I let it play out, and now I got to go put in more money than that to be able to take my position back again. But it's part of life. You learn, right? And I'll make sure next time that I will keep the account open, especially if I know which way or the market is turning. The point is this: a lot of stuff that I do here, a lot of stuff that you see other folks do on the internet, it looks extremely easy, and you think that, hey, it doesn't take much experience to get into it and to do it, and I can just like willy-nilly work my way into it. And the reality is, once you get into it, it gets very hard. There's a lot of emotions that you have to deal with, and there's a lot of things that you thought you saw, well, you really didn't see, right? So my advice to you is always practice, 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 practice. Open up a demo account. Full disclosure, I tell you guys all the time about going up and getting these Smart Traders account. But understand this: if you get the Smart Trader account through our affiliate link, then we're an affiliate of them, and then so therefore, if you register and you opt for a paid version of the software, then we will get a small percentage of what you paid, right? And we get, that's our fee for advertising and promoting their product. Now, here's the kicker. I would promote their product even if I wasn't going to get paid for it, and that's why I encourage you at least get the demo version, right? And the reason being is because I really believe in their product. I think the smart tools are excellent, and I think that for what's out there, you can't really beat it. I mean, the fact that you can just click a button and automatically all your Fibonacci sequences are put out on the chart for you. You don't have to think about it. You don't have to do anything. To me, as a trader, that's invaluable. And not only that, they have other stuff as well, such as support and resistance. They have the automatic trend line. I mean, just a lot of stuff that they got that you can't really get anywhere else that I think is really, really good. So, at any rate, long story short is that by doing your best, it means that you go out and you get the best tools to help you be the best, right? And if you can't make $24 or $25 a month trading, then you probably don't need to be trading. Right, if you want to sign up for the elite package, which is about $60, if you can't get $60 a month out of trading, then yeah, you definitely don't need to have those tools. But if you're somebody who says that, hey, I want to quit my job at some point, hey, or somebody want to try to put together a financial future for my family at some point, then what you need to do is not try to go out here and do this with some makeshift free, software that you get on the internet. But what you need to do is get some purposeful software that is made for traders, right? That helps traders, right? Pay the fee for it, right? Utilize it, make the money, from using it, and then use that money to pay off whatever fees that you got. That's how it works, okay? Not you having to go out working 9 to 5, pay for the software, and then hope that something happens. You shouldn't be doing that. If you're doing that, then you're doing it wrong. You should get the software, and then your trades should be making you enough money off your trades to be able to pay for whatever software that you're using. If you're not making enough money off your trades to pay for the software that you're using, then you need to evaluate your trades, or you need to keep practicing until you can get up to that point. Okay, anyway, guys, that's it from me. Thanks for tuning in. I appreciate you. Hey, God bless you. Stay safe, and I will see you next Monday.